All right, what's good, everyone? Hope you're all doing well. So today we're just going to go over a trade breakdown on two trades that I took, which totaled to about 25 risk reward, which we call about 340 pips with these two trades. So what we'll do, let's go to a clear chart and mark this out. Let's get rid of the drawings. Right, so let's go back in time a little bit. So what do we see, right? So we started off the daily time frame, and what we see is the first thing I saw was this point of interest, right? So this was the point of interest that I was mainly focused on for us to take a buy position. Now, there were other sort of buy opportunities within here, right? We could see price reacted off this point of interest. We could see we had a slight rejection off of this. You know, we had a slight rejection off of this. But surely the bigger move was going to be on this daily block. Now, the reason why is because what I saw was that these, even though they're valid, I did not see price respecting these. The reason was because I saw that we had equal lows that price would have wanted to take, making these a little bit more on the risky side. So my total bias was pretty much to take sells all the way up until this level, where we caught some buys, which was pretty much the main move. So when we look at this, what do we see? So we saw price come straight down into this zone, right, which was our daily zone. And that is when I went up down to the 4-hour time frame, right? This is where I saw, right, first of all, we've now wiped these two equal lows. Second of all, now we're starting to reject price a little bit, right? So let's play price. Right. So this is where you can see how price pretty much rejected, it started to reject that zone. And it's pretty much where we realize, well, yeah, okay, well, this is pretty much a valid respected zone. Now, the way I took this trade, right, was I saw this, right? So the first thing we see is price start to reject this area and give us a market structure shift, if I can get that. Cool. So what do we see, right? So let's go down to the 50-minute time frame, which is where we took this position. Sorry about that, guys. Not sure what's happening there. Okay, there you go. So what did we see, right? We saw price broke through, right? We started seeing price breaking through this zone, which was our 4-hour initial zone, or high, you could call it, for a structural shift. And what we started to see was all these wicks pretty much wicking out of this area, but we never got a closure, right? We never got a closure, hence the reason why I wasn't looking for any positions just yet. I wanted to see a break and a close. So let's play price and wait for that. Right, so there, we ended up getting a break, right? And our initial break on the 15-minute time frame, obviously, you can mark a few points. You can mark it here. You could maybe mark it down here. Right, you can mark it a few places, but we had a clear indication that on the 50-minute, obviously, we had shifted. So pretty much what we saw was that price shifted now, right? It's broken on the 4-hour, it's also broken on the 15. So they're both now aligned, right? And obviously we've come into a major zone, which was a daily point of interest. So what happened? Price now broke through these highs, right, on the 4 and the 15-minute, 4-hour and 15-minute. So what I did was I went ahead and marked out our nearest zone for us to take an entry, which was right here. Let's put that in a different color, right, which was right here. All right, this was the exact zone that obviously I took a buy position from. Now, what else do we realize is when you fib this up, price is below, sorry, our zone for our entry is below our 50%. Now the 50% is important because this is where we want to be getting better positions, right? This is a good way to get into trades where instead of getting in early here, you won't get spiked out. You'll be in a position to take a trade earlier and lower within a certain leg. Okay, so what we did was we marked that, and that was pretty much the area that we marked. So what happened then? Oh. Okay, now price came into our zone. So what we did was we mark and executed. Stop was just there. And we had our take profit, right? On the 4-hour time frame, I marked this zone just here. Right? Now this was our area that we wanted to exit the position. Now you may ask, why did I not want to hold it a lot higher than that? Now there's a few reasons, right? One, obviously this is a another area on our 4-hour time frame. We could have obviously held it all the way up to these highs, but my thought process was, obviously, we see that these have obviously been tapped into. Our other area was up here and up here. But if I'm honest with you, I was really happy with my position. I was very happy with the profits, and I just decided to obviously exit. Now, that's something you will learn as you gain experience, that, securing profits is obviously very important. So hence the reason why I decided to enter, get out of this position here and move on to my next trade. So that's where the first position was, right? Now, let's go over the second position. Okay, so this is where I then obviously started looking for a second position. Now, obviously, this was quite a good trade because we ended up getting a break of structure just here, which confirmed that this point of interest just here is also valid. So what I did was I ended up taking this trade as well. I just set my limits on this trade. It was a little bit late, so I just set my limits on that trade. My stop loss was just below these lows, just there. So my stop loss was just below there. Now, some of you may ask, well, why did you not decide to put your stop loss, tight on here? Well, the reason was, one, because it's a limit, and two is because, sometimes price can spike out of these areas, especially at the time that this was happening. Price can spike out of this area, so it's just better, just a little bit of room. Yeah, you have to sacrifice a little bit of risk reward, but I'd rather, win a trade with still a decent profit than, lose the whole trade. So that's why we gave it a little bit of space, just protect it below these lows. So what happened then? Price came in and it tapped straight into that. As you can see, that was a beautiful entry, right? And then price started shooting off to the upside. And boom, just like that, we got our both take profits hit, and that was us out of the entry. Now, another confluence that I had within this trade, which was very powerful. Now, hence the reason why some of you may say, well, why did you not take a trade here? Why did you not enter down here? Or, all these things, is because I also combined Wyckoff into this trade. Now, Wyckoff is a very powerful tool that I use as a confluence for my trades. Which is a very good confluence because it gives you a good area for, one, for accurate trades, and two, for exits as well. So I included Wyckoff into this. So if it's something that you guys are interested in, I can definitely make a video on how I implemented Wyckoff into this trade. And yeah, that was pretty much it. We obviously hit our TP, and then we had a few more positions that we ended up taking. So yeah, if you guys liked the video, make sure to give us a like and subscribe if you want to see more of my content. And yeah, comment below, what is it that you guys want to see next? Would you like to see a Wyckoff breakdown? Would you guys like to see more breakdowns of how I take some of these trades? But yeah, if you have any questions, feel free to message me on my Instagram as well. If not, just drop a comment on the comment section. But except from that, take care guys, and I shall see you later.